What's happening, handsome?
How you doing? Thanks for having me.
Look who it is. If it's not the CEO of EXP.
Thanks for having me.
I mean, it's my pleasure. Are you kidding me? This is long overdue. Don't you think?
Yeah, let's do it.
Yeah, we're doing it, man. We're in the process of doing it. I'm going to play a video here, and then we're going to talk. Are you ready for this?
I'm ready.
All right, let's do it.
We are not finished building. Neither are you. The future of real estate is still being written. Write the next chapter of your story with us. EXP Realty, built by agents, built for agents. Let's build it together.
Pretty strong.
Appreciate that.
Now, when you put out a video like that, do you have a hand in the editorial at all? Because I know you have that kind of brain. Or do you just let the team do the
I
thing?
don't. And actually, there's a 50-50 chance that wasn't even my voice. That was my 11 Labs clone.
Ah, okay. Well, you're a techie guy.
Yeah. So we have a Leo Pareja robot that can take text and turn it into my authoritative real estate voice that has thousands of hours of me talking. So the marketing team, they can write something up and then say, hey, make it sound more like Leo.
Well, I just want to confirm this was not a robot. That was
that was not the robot. And it's only the voice. We haven't gotten the video avatar to work quite well.
You might be working on it though. Who knows? You and I spent some time together, got to know each other at the Kentucky Derby a couple of years ago, and we had such a great time. Got to meet your wife, Ariana, and we really just had such a blast. We'll share the light stuff now. Also, Clayton Collins was on that trip. This was an epic picture. I think this was a few minutes before the governor of Florida at the time, Marco Rubio, was in there, right? Rubio was in there. And was DeSantis in there too?
It was DeSantis's bodyguards that kicked us out.
I thought Rubio was in there too. But yes, we got kicked out. But before we got kicked out, we had some cocktails.
Yes.
And there's just about everyone in this picture, with the exception of a couple, are mortgage folks. And then we had a great dinner with Clayton Collins, and it was just a wonderful time. And your wife is just all things amazing. And I think that my takeaway from that time with you guys was just seeing how you genuinely love each other. And and you're responsible for, 80,000 employees. It's probably 100 at this point. I'm sure all the data's old, but you find time for family, and it's super important to you. And I will say that my claim to fame in the Pareja household should be that I personally took what I believe has to be one of the top 10 pictures of all time. All time. I'm saying this.
Yeah,
but tell me it gets, bro. That's from my iPhone. I want you to tell me how many pictures you have that are more epic than that.
That's up there.
It's up there for sure. All right, so before we jump into private listings and we talk about the real estate business and how it's changing and where to from here, looking to remove you from the stage right now. This picture, because people are going to be very distracted. You're back from Italy. You went to Italy. You went to Europe. You were gone on a 30-day.
It was
trip. Tell us about it.
8 weeks. We left.
Oh, 2 months. 2 months.
We left in early June and went to the UK. We went to Portugal. We went to Paris. We were in Spain. I ended the trip in California, and now we're back home. But every summer, I take the summer with the whole family to see as many of our agents as we can. So I got to see 1,000 agents overseas, which is pretty incredible because we have about 6,000 agents in our international business unit outside of the U.S. and Canada. And then I ended the trip in California with Tom Ferry and got to speak to about 5,000 agents last week.
And now you're on one-on-one with Greg Sher. How about that?
Yeah. So glad to be back, and kids start school on Monday, and then back to the U.S. Schedule.
So what is the head count? How many employees at this point?
So agents, independent contractors across both of our brands is right around 87,000 agents. And then if you add, we have about 2,300 full-time employees and contractors across 29 countries. So you said between 80 and 100,000. So you're right.
Yeah.
You're right in the sweet spot. So we're touching 90,000 humans that we're responsible for in one way or another.
That's a lot of it's a lot of responsibility. There's a lot of things happening in our business, and recently, you know, what made me think of talking to you about several things was nobody's watching the comps. This is an article that you authored that showed up in Inman, which really got a lot of headlines. You and I spoke we communicated by text while you were in Europe about private listings, and there's a lot to unpack here. You know, I want to do it from the lens of, so just so you understand, like I know you know mortgage and you know real estate, right? But a lot of people in mortgage know mortgage. They don't know all the inner workings of real estate. So, you know, I want to try, you know, I want you to talk to us from the lens of lending as much as you can.
Yeah, sure.
And so we can kind of tie it all together. So this article, you know, pointing out that basically the bedrock of which every credit decision is made on is, you know, potentially going to be in a state of peril as more and more sales end up not showing up where they need to show up so that appraisers can do their job.
100%. So I would say that real estate is unique in North America, and that is the US and Canada. So the fact that all listings are exclusive and the fact that we have a complete marketplace is a uniquely North American thing. And places that you would assume would have it, the United Kingdom, Australia, South Africa, Japan. So I'm talking about first world countries, homes as or more expensive than ours. If you're a consumer, if you called me up, Greg, and said, Leo, I want a house in the south of France. I've had it with Nova. I'm going to sell everything and I want to go live my life in Antibes. I would connect you with a phenomenal agent we have over there. And she would have to hunt and peck across 8 or 9 different portals. And some of are national portals, some are real estate websites, because the inventory is completely bifurcated and in different pockets. And for a lot of it, they probably have to get on the phone and call people, right? The concept that if you go to kellerwilliams.com, remax.com, exprealty.com, or Zillow or Homes, it's actually the same complete data set. And by the way, when I sold homes and I had Leo Pareja team.com, if you were to get your license and decide to sell homes in Northern Virginia, you'd join Bright MLS. I think it costs you $45 a month, Greg, and you could set up gregsher.com. And as a dues paying member of that MLS, you could pull the full feed, and gregsher.com would have the complete data set of all of the MLS listings that are available for sale. And that is completely take it for granted in this country because we don't know another way of doing it. And so there's been this very loud push by some market participants to keep stuff completely off, and they're calling it seller choice, which is just elegant marketing speak. And I call bullshit on it completely. I don't think it is beneficial for the seller. And I mean, there's probably a time for it, and we can talk about that later, but it's such a kind of fringe explanation that is highly atypical. But one of the things that happens with having MLSs is that we have sold data, right? And sold data is where all comps come from for appraisals. And it's how AVMs are created. It's how there's desktop underwriting, and you can now do, you know, a line of credit basically without anyone coming into the house because the models have gotten so good. If you go to buy a house in Tuscany, I asked an agent at a mastermind from Italy while we were in France. And I said, how do you price a home? And he literally went, like, we just kind of take a guess, and then it sits on the market for 6 months and somebody lowballs you, and then you push back, and that's just to get it under contract. Then it's just as complicated and as perilous to get the loan, because then you're fighting with the bank of what the property's worth, because there is no central repository with all of that information that's reliable.
So what's the response been? Well, first of all, what's the claim? Just what is the high level claim and attention that you're trying to bring?
Yeah, that as we continue to push towards having these walled gardens of information and properties marketed and transacted off of the one place we all agree to do business on, you're losing comps. So I can give you real examples where an agent has told me that they went on a listing appointment, they had all the comps set to present to the seller, And they're like, well, there's a for sale sign right there. Why isn't that not in there? And it's because it's not in the database. It's not in the shared database. So we don't know how long it's been for sale. We don't know, has the price been reduced? What's the activity on it? You can't look any of that up if you're not participating in that marketplace.
So the data seems to back you up on this. A median seller loss around $5,000 on off MLS deals was the data I was able to find. Off market sales double ending about 70% more often, and most agents saying clients never even ask for it. So who is a private listing actually for? Is a question, and not just because I consider you a friend. This is my position, because I'd be happy to go toe to toe to the extent that I could. But in this case, we're not. I don't understand private listings. I don't think, I've sold and bought a lot of homes, and certainly there are those outliers, but I want all the data. I need to know how many days the house has been on the market, how many price cuts, because it gives you full visibility into all kinds of things around the collateral.
And I think one of the arguments is this, like, well, what about the seller? Well, the seller is almost always the buyer as well, right? Like, as soon as you're done selling, you become the buyer. And, if you're going to participate in the marketplace, don't you want the same benefits when you're on the other side of the transaction, is one way to look at it. And, I think that part of the argument from the other side is they're vilifying some of those terms like days on market and price reductions, but those are market signals. That's how you know if something, like, we have expiration dates on food, right? Like, it is good to know if the market's telling you something about a certain property, and those are the critical paths. If I know, and for anybody who's a slightly skeptical, like we got some comments on that LinkedIn post I made, I said, call an appraiser, ask appraisers what their experience in the field, because we are having those conversations one-on-one, and we're hearing that. And I could sound like an alarmist, but I truly believe this. The system we have in the United States happened organically over 100 years, right? So, like, the current version of the MLS is literally the evolution of the paper books that we had in the 80s and 90s, going back to, like, probably in the 1910s, where they probably met in the town square and shared what they had coming, that farm or that ranch coming down the pike. And why it works is because there's a concept of participation, mandatory participation. So a lot of these rules, these MLSs had, hey, you, by being a member of this MLS and you having the ability to pull information from this database, you promised and committed to putting your stuff in on the same date, right? Where the only way a complete and total market works is actually if competitors come together, which is very atypical, right? And share information in a completely transparent way. Right? That doesn't happen in other industries. And unlike other industries, this is someone's home. This is where the majority of the American homeowners or American net worth is held. It is probably the biggest possibility to go up the economic ladder. The average net worth of a renter versus the average net worth of a homeowner in the United States. It's a forced savings account, right? Forget appreciation. If you bought a house and held it for 30 years and liquidated a 30-year mortgage, you're going to have done better than if you rented for that same 30-year period, right? There's just irrefutable kind of mathematical things that exist in real estate, which I think is why they're so regulated. And to our peril, I think the industry is now going to have a lot of scrutiny from the government, right?
We're seeing that. I mean, Senator Warren warned just days ago this could create a two-tiered housing market and civil rights risks with a House committee, and now Zillow's antitrust lawsuit piling on. So, my question to you is, do you feel vindicated or worried now that, Washington is going to meander into this? That doesn't lead to a lot of clarity in a lot of instances around housing, especially.
I've been yelling about it for 2 years since it kind of bubbled up. I genuinely don't need to feel vindicated. I just want us to do the right thing for the American consumer. And even if, like, as market participants, by doing this, we continue to have an efficient market, right? Like, what I can tell you is to sell a house in the United Kingdom could take 4 to 6 months, and then it could take 4 to 6 months to close it. And that, they're a lot older than we are. They're a lot more sophisticated than we are in a lot of different ways. But this one thing that we've managed to do better than just about every other country on the planet has given us a more efficient, faster, liquid market. And by the way, Canada just does it just as well or better. So, and we can see the difference in LTVs, the longer debt instruments, because we have this underpinning of very clear data. Like what I can tell you is it doesn't matter if we're looking in Northern Virginia, Miami, Southern California. You and I trust the data, right? Your institution does loans all over the country, and you can just order an appraisal and you are confident in the data, and then you can kind of rep and warrant that transaction to be sold into the capital markets because the system exists.
So, you're sticking your neck out there. It's what you do. You're a leader of people, and your model. You're not a private listing model. So there will be people, and there have been people, I'm sure, that will say, well, it's sour grapes, or he's just pushing back against a model that he doesn't have or can't, doesn't enjoy right now. Sorry to ask the question, but I must. I'm sure it's not the first time you've heard it. So what's the answer to that?
Yeah, no, my answer's been pretty consistent. I'm one of the biggest on the planet. Like if I chose to participate, we would only accelerate the problem. And I've said it on earnings calls, and I've said it, if the world doesn't change, I will change, and so will all my competitors, right? So like the concept of, hey, come to my website because I have more inventory than everybody is only valid until the rest of us pull our inventory and play the same game. Right. And so it's almost like an assured mutual destruction if it goes long enough, where folks are going to say, okay, well, then I'm going to do it too. And then what's going to happen is you're going to have to go to 5 or 6 or 7 different national websites to try to have a semblance of what the available inventory is. And like that doesn't sound like a better consumer experience in any way.
So you once led NAREP, which now calls this potentially the worst fair housing crisis since the 1960s. Do you think is that accurate, or is it invoking civil rights against a business rival? Is that a step too far?
No, I think I started there. And unfortunately, I don't think people listened 2 years ago. So now I'm leaning into the financial impact because people tend to be self-interested in that regard. But it is a fair housing nightmare. And I'll walk you through it. Even if unintentional. And that's the thing about fair housing violations. Most of the ones I've been exposed to weren't on purpose, right? But if one group of people have information that other groups of people cannot see by definition, how are you going to protect it from unintendedly, disproportionately hurting the folks that need the most protection, right? If you have a property that's off market and you have an all cash buyer, but the person who is using a down payment assistance program never even found out about it. Tell me how that is not a fair housing nightmare.
That sounds like a total calamity.
100%.
I wonder why So where do you think this ends up before there's some kind of a resolution?
That's a great point. I mean, I do think that there is coming regulatory scrutiny, and I do think that if it progresses, it's going to have unintended consequences, right? Like if certain competitors get an unfair advantage, and again, advantages are fine. An unfair advantage is where we all seem to have a problem, right? Like if, for example, your competitors were not following Fannie and Freddie guidelines and they could do higher LTV loans, that would be an unfair advantage that you would not be okay with, right? That it's not a completely transferable comparison because like that wouldn't happen, but that's kind of what it feels like for us, right? Where it's like, wait a second, these are the rules and some participants are just not following them, but you still get all of the benefits of the people who are participating. It will only go so far before other folks decide not to participate as well.
What's the history of private listings? When did these start to bubble up, and when was that oh shit moment for you and you're like, this is something we really got to look at? Yeah,
well, I mean, like the elongated history is, by the way, basically private listings is how real estate worked before buyer agency was introduced, right? If you go back to like the late 80s, everyone worked for the seller and the seller only, and you shared listing books. And buyer agency was introduced, and we actually had a fiduciary responsibility provided to a buyer. And then really what opened it up was in the early 2000s when we went online with the first MLS exchanges. And by the way, there's history with the virtual office websites, the VAL feeds, where in 2005, the industry dealt with the DOJ, just because, by the way, the industry was going to cut out companies that didn't have physical office space, right? So that one intervention from the DOJ gave rise to our company. Like when we were started in 2009, there were states and industry participants that didn't want to treat us like a real company because we had no physical space, and they tried to preclude us from being member participants of the MLS. So I would say that this is probably even more personal to us as a company in our origin. Like if we didn't have the ability to pull on these feeds and compete, we wouldn't have been able to grow into a dominant player in the market, which, by the way, pushes competition and holds people to be the most innovative, right? Competition is a good thing. But when I say this, like, I don't think this is innovating on marketing. I think this is trying to rig the game in a very real way. And this was kind of the next shoe to drop after the NAR settlement. Like, once the dust settled from NAR settlement, there was many market participants that went after this as they saw it as an opportunity to make more revenue.
Are the right people hearing the concern, do you think? You obviously have ears of very powerful people, and you know a lot of powerful people. So what's the answer to that question?
Yeah, no, I think so. And I know we're going to a midterm, and affordability is a real thing, and I don't care which side you're on, right? No left. This is not a left or a right thing. This is an American problem we have. I think affordability is probably the biggest thing facing our industry and American home ownership, right? We still have we're living in a post-COVID world of inflated dollars, right? I think, and I'll tell you, one of the interesting things about spending time abroad is my Canadian agents, my European agents, my Latin American agents, they're just as frustrated with their government, with inflation, with the cost of everything, with high interest rates and low inventory. So it's not a unique problem, but we're exacerbating it. We have a system that works, and we're making it worse.
How can we make it better?
For the folks who can affect change, to listen and to push back and to make sure that we unfortunately, probably it's going to have to end up being legislated at this point. And again, I don't know that the government's going to ignore it at this point. When Congress is holding subcommittee meetings, I think you've garnered the attention of the folks that aren't going to let it go until they at least make a decision. And to your earlier point, I don't know that our government has the best track record of coming up with solutions, and that could also have unintended consequences.
Oh, for sure. I mean, you have to have people that have knowledge and acumen of housing there, in the right positions, in the right ears. And so far, it doesn't look like we're quite.
I mean,
all the way
I think we've
there.
seen some movement at the state level. So the state of Washington has passed disclosure requirements. Connecticut, New York, Montana is working on it, and I've heard many other states are also working on it. So whether it comes from the state level, the federal level, I do think that because this affects so many people, this is going to make its way to the folks who can actually affect change.
Any ideas on how to bring affordability more into focus? Things that you think are within reach? Is it programs? Is it FICO scores? Is it LLPAs, G fees? Do you have an opinion about that?
Yeah, I mean, so much of what transpired has been systemic, right? So I think post financial crisis, we didn't build enough homes for a decade, and then Dodd-Frank and CFPB were what we needed, but it increased manufacturing costs. Like, as you said, I understand real estate, but I understand lending quite well too. And like, the cost to manufacture a loan in this country from the regulatory standpoint is very burdensome, right? So I don't have a magic wand solution, but I do think what helps is actively thinking about it, and anyone who can influence it, spending time worrying about it. So, like, to take it back to the earlier subject, if we disregard the fair housing effects or the comps, because it could end up to 2 or 3% just more in transactions, that's actually extremely dangerous. And collectively, we're cutting our nose off to spite our face for no apparent reason when there's no need to.
What's your take on inventory? Do we have enough of it? Do we have a need for more? Opinions are very mixed.
Yeah. So what I was saying, that we are in a hyper localized market, right? So nationally speaking, depending on the economist, we are short somewhere between 5 to 15 million homes from the construction from 2009 through now. So depending on who you ask, we just simply don't have enough inventory. What we've seen in the last 12 months, it's hyper local. So like Southwest Florida, so Cape Coral, Naples, went from no inventory and multiple offers in post-COVID boom to 6-7 months of inventory, right? If you ask the folks in Westchester, outside of New York, they have 2 weeks of inventory and there are multiple offers and you're competing with 16 contracts. So they would tell you that there is an inventory problem. What I do think is probably a true statement across the board is we definitely lack entry-level inventory. And I can give you very, very real examples. You and I are both from the DMV. I can probably drive you over in Prince George's County and show you land that is affordable and could deliver an entry-level product. But then you go down to Prince George's County, Montgomery County, and the impact fees alone are $80,000. On a $400,000 or $500,000 or $600,000 home, that's double-digit percentages of the cost of the transaction. So it's very hard to overcome those fees unless you're building $1.2 million or $1.4 million. And that's where you've seen a lot of infill in like an affluent area like North Arlington or Montgomery County and Chevy Chase, because those are the type of transactions where you can bury those kind of impact fees. So I would be hard pressed to have mixed reviews that we have enough entry-level housing stock across the United States, right? And post-COVID, construction costs soared everywhere, right? With logistics of both materials and labor costs. Is the labor, the dollar's been debased quite a bit in the last couple of years, and there's real labor cost increases. And so I don't know that anyone would debate that we are lacking real entry-level housing stock.
How much do you think policy, this administration's policy, is impacting affordability when it comes to housing?
Yeah, I would say that at the federal level, I said it during the last couple elections, like I don't think any candidate can really move the needle because it's such a localized problem, right? The impact fees I just described in Prince George's and Montgomery County and Arlington County.
Tariffs and wars make housing more expensive, right?
Yeah, so I mean, we've seen a material change going into from Q4 of 2025. We were heading towards, an interest rate that had a 5 in it, right? I mean, I think January was probably one of the best months you guys have had in a long time in your side of the industry. And it was interesting because I spoke at a conference and I had an LO stand up and say in February, he had his highest number of cancellations ever in his entire life. And he started, woe is me on himself. But luckily he was smart enough to then look it up across the board and realize it was the highest cancellation rate of mortgage applications ever. And then he had the wisdom to not say I'm an idiot and woe is me, life sucks, and realize that he was just licensed in February of 2026, right? And so I think if we were betting in January, we would have guessed that rates could have had a 5 in front of them, like a 5.95. And I think today we're probably sitting at 6.85, like a full 100 basis points more.
Are you a fidgeter? Are you fidgeting? What's that noise?
I don't know.
You're a fidgeter, aren't you?
I'm always touching something, but no, I'll try not to move.
No. I like when you move. I'm just, hey, I heard a. I don't know if you're like if you're like cocking the gun. I don't know what's going on there.
I do keep a switchblade right on my desk.
That's your tchotchke, just in case anybody breaks it. I mean, you are.
If it gets serious here, Greg,
that's what it is. Well, you're an important guy. You're an important guy. So ICE recently came out with what they think could fix affordability. There were 3 options. I'm going to focus on one of them right now because it was a depreciation in current house values by somewhere around 15% would bring everything back into focus. Now, that's a dangerous thing for someone like you to say, right? Because you're trying to encourage these agents, and in an environment where values are going down, I'm assuming that's not great, although someone like you're so positive, you'd probably find a silver lining. But what are your thoughts when you hear about that? And what would that, if that is the shoe that drops, how will that impact housing?
So the quick answer is it depends how it hits, right? So if we had 2008 or 9, I would hope that our federal government and all of our financial institutions would do everything in their power to never let that happen again, right? That was a free fall of value. It created a moral hazard. People started walking away from their homes. And I did a lot of foreclosures in the tri-state area, and I can tell you what it did to neighborhoods. People just abandoned vandalism. It was the broken window theory. If you've ever read Malcolm Gladwell, it was very, very, very real, right? So an abrupt kind of free fall, and what it did to communities would be terrible. There are parts of the Sun Belt who probably experienced 8 or 9, even 10% depreciation over the last 18 months. Again, I think anyone directly hit would be very, very upset about it. I do think there is a portion of the population that either have no mortgage or have 70% equity. And so it's probably, like, from a mark to market standpoint, doesn't do anything unless you have to sell. Right. And that's the part that people forget about the world. It's, it's only a couple percentage points of the total housing stock that's ever for sale anyway. And it only affects you if you're selling or refinancing. Right. So if prices were to come down, that's one of the levers of the, I call it a 3-legged stool, right? It's the supply, the demand, and then the affordability quotient, right? Like, there could be a ton of supply and a ton of demand, but if rates are 14%, there's only X amount of transactions, right? There could be a ton of demand and no supply, and we still don't have a lot of transactions. Right now, I think we're probably getting to a point where we have adequate supply numbers and adequate demand numbers, but there's folks that still are on the sidelines. So whether it's prices come down, or I'm going to take a guess that one of the other ones, if rates were to come down, call it to mid 5s, is what I've heard referred to the Goldilocks range. That would probably bring some people off the sidelines and into the market, because let's say you're sitting on a 5% rate, trading it for almost a 7% rate is untenable, but maybe a 5.5% rate is more possible.
So I shared with my audience a pretty well-respected housing person who said that renting is better than buying right now, that you can save $800 to $900 a month by rent. Ivy Zeldin said this. So, I played that sound bite, and look, we're at the top right now. Like, to think that values are going to go up another 5, 10, 15, 20%. I think it's unrealistic, given that we're already inflated, as you said. So, like, how do you sell the dream? What is the dream right now for home ownership in a very realistic way?
I'll tell you how I sold it for 16 years that I sold real estate, right? Especially being in the DMV, I would sit down with a family and said, why are you buying? Like, first of all, what's the why here? And then what's the timeline? And it was very common in the DC area where folks were in for an administration or a contract. So they were like, I'm here for 2 years and then I might decide. And so first of all, I said, a property, when you have a short-term potential hold, you should actually underwrite it as a rental property. Full stop. Like, if you're only going to be here for 2 years and you're buying a townhouse or a condo or whatever, you need to buy it for a purchase price and a down payment that you can actually hold that as a rental for an indefinite amount of time, right? And with the amount of transient folks that you have in the DC area with government, a lot of them ended up with rental properties when they had to leave. And then the second part I would ask is, there's statistics on how often people move out of an area or something like that. If prices never went up a single dollar ever again, I would tell you that it's probably still a better idea to buy it with a 30-year fixed mortgage. You lock in that interest rate, right? Rental appreciation has kind of been going up for, last time I checked, 50 straight years. And there's no write-off, and there's no forced savings account. So while that statement could be true in some areas, I doubt it's absolute across the country. When you think of how people are with their money, right? Like the discipline, and I think the best statistic is average net worth of a renter versus a homeowner. The forced savings mechanism that is created from a mortgage payment is probably one of the best tools the average American has. And so I would say to people, if people were going to be in a house for more than 10 years, I had not experienced over multi-decades a time period where in 10 years you were worse off than by having bought than have rented. And again, that's my personal experience, and that's how I would talk to someone. And Greg, I can tell you that throughout my real estate career, I talked a lot of people out of buying a house, right? Where I was like, you know what, maybe you should rent. And if you are hell-bent on owning real estate, maybe let's look at a cheaper priced or different location and get you a rental property, like just a straight real estate investment that underwrites and cash flows as a piece of real estate. And for a good portion of our relationship before we had kids, Ariana and I rented our primary residence, but owned a lot of real estate, right? Because I wanted to be in the brand new building in the centrally walkable part of town, but we owned rental properties that actually cash flowed. And it wasn't until we had our first kid that I had the very real urge to buy that single family home, which, by the way, makes no underwriting sense, right? My house is way more expensive than probably renting something smaller, but I've been in it 7 years. It's probably doubled in price, and over the long period of time, even with all the upkeep on a property, it's probably going to be one of the better financial trades I've ever done.
You were the #1 Keller Williams agent in the world by 28 years old.
Yes, sir.
Wow. 4,000 career transactions, CEO in 2024. I mean, none of it was given to you. You earned it all, man. For those people in the struggle, for those people that are trying to get, to down the road, talk about what adversity you faced, what was the point in your life that felt like it was the bottom, and how did you get yourself up?
The bottom was definitely the financial crisis, right? So I got licensed at 19. I went on to sell a bunch of real estate by my senior year of college. I made $500,000 my senior year of college. It was $306,000 was my senior year while I was still a full-time student. And by like my second year out of college, I was making $500,000 pre 05, 06, which again, might as well have been $1 million today, right? With inflation, with what it's done. And then the financial crisis flipped my life upside down. I had 14 rental properties. I had an X5. I thought I was very special and very talented. And as it turned out, I was a creature of the market and had a heartbeat and a license and slightly more hustle than the average person I was competing with. And I had to give it all back. Lots of boogers, lots of crying, lots of short sales, lots of negotiating with banks. I handed the keys back to BMW and realized none of those were mine. They were leveraged and they were borrowed. But it's one of those moments in life, which, by the way, I'm extremely grateful that I went through that in my early 20s before I had dependents and people. I didn't have to drag my kids out of that property with me. And I got to see it firsthand because I got really pretty good at loss mitigation and doing short sales and foreclosures. So I saw the other side of that. And I can tell you kind of fundamentally rewired my DNA. And I have just very specific views on what's important. And then I would tell my younger self, right, that like some of these external things aren't that important, right? Like I feel like I've had multiple chapters in my story, and I've gone from being an agent to private lender to a technologist to now a corporate executive. And I do know that like it's a role I'm playing right now. And at the end of the day, like I'm a father, I'm a husband, I'm a son, I'm a friend. And that's actually what transpires highs and lows. And I actually just made a post about it this week. And I said, one of the most dangerous things is when you mix your identity with your business. Because if you have a bad day or a customer fires you or a competitor beats you and you're number 2 or number 3 instead of number 1, and you've tied your entire identity to it, that leads to like real depression and real kind of hardship in your brain. And at the end of the day, like one of the very strong reframes I do, it's like, we're going to die, bro. Like all of us, not one of us is getting out alive. And probably the easier one that I can do with my kids right now is like, go back to being in college and like the worst possible thing that happened to you in college or early in your career, which is now kind of like a laughable story. But back then you were probably losing sleep at night. You were worried. You weren't sure how you were going to get through it. And as you get, you progress in your career, you get better at pattern recognition. You can, something that could seem like an obstacle, you can recognize as an opportunity to take a leadership role and guide people through it. And by the way, if it doesn't work out, I think people spend too much time worried about what other people think about them, right? Like, why not? Like, because you look silly, because you'd be embarrassed to people that actually aren't that worried about you. I think there's this crazy mental dialogue that happens of, what if I fail? What if I look back? To who? Who cares? Nobody cares.
Yeah. What's been the most gratifying part of this journey at EXP? over these last 2+ years?
So I've been there 4. I've been the CEO for 2, but I was very much actively leading the business before I took the title on. The most gratifying thing I hear over and over again when I'm with the agents, which I just spent a bunch of time with the agents, is when they come up to me and say, I feel safe here. Like with the amount of turmoil and the amount of headlines and the amount of change, we've been able to move quickly and take a leadership position on most things and put out, disclosures and how-tos and chart the path forward in a very confusing time. And agents over and over and over come and tell me, hey, I don't worry about it because I know I'm going to get an email from you with the agreement, the addendum, the disclosure, the how-tos as to what we should do, and I don't have to worry about most things.
Yeah. Leo, there are a lot of bets being made on control that I think are centered around controlling the agent, or a presumption being made that if you pick up servicing and you pick up a real estate brokerage, especially an online one, and you marry it with a lender, that you're just going to be able to capture all of that business. I always take exception to that, and I continue to believe that communities will matter more than any of that, and that agents are very resilient and stand up for themselves. Do you agree
100%.
Do you agree that that is a bet that's going to end up being? First of all, do you agree that's the bet that's being made? And second of all, how important will community remain in the next 5-10 years?
Yeah. So one is like you could have a model that works, right? Like some of these companies, and you can listen to the earnings, they sell maybe a couple 100,000 homes a year through their relationships out of 8 million, right? I recently saw a presentation by the godfather himself of referrals, Brian Buffini, and I had the slides, and it was something like 2025, I think 9% of the transactions came from seller portal referrals versus like 80-some% still came from trusted source referrals, like a friend of a friend or a trusted professional. So I am always shocked in just about any industry, actually, about the disproportional thought and effort on where people spend their time versus what actually happens in their book of business, right? So if I were to sit down with any agent who sold any meaningful amount of real estate, then they do it full time. My first question is, okay, how many transactions did you do last year? Then the follow-up question would be, where do they come from? Right? Where do they actually come from? And whether it was a loan officer or a realtor, I can bet you that if they spent the next 5 business days, 8 hours a day, calling everyone they've done a deal with, and just simply, hey, by the way, Greg, do you remember I'm still in the lending business, right? Like, how's it going? And I'm still here. If there's anything I can do for you, you would know what to do with the amount of business you would have, right? And so I don't care what happens with technology. At the end of the day, we're a deeply tribal species, right? That's why we enjoy getting to know each other, spend time together. And the best proof of that, Greg, is COVID, right? During COVID, there were camps of thought that we'd never get together again in an arena or in a concert hall or in a crowded restaurant. And I think what we proved is as soon as we could, we ran towards that at Mach speed. And the other thing I firmly believe is that because of all of the push into AI and digitizing everything, we're actually going to experience a pushback. And I'm telling my agents and everyone who listens that we're about to experience a human premium, right? I'm all in on in-person events and making sure that we're spending time collaborating, because one of the side effects of all that technology, like you did that intro video, and I can tell you there's a 50-50 chance that wasn't even my voice and it was one of our robots, that there's going to be a continued rise of distrust of digital media, whether that's video or sound or anything, where I think certain people are going to go, you know what, I don't trust the online thing. I want to talk to Greg in his office and I want to meet in his office. So in a weird way, with the push into digital, I think we're almost going to get a pushback.
I want to talk about your charity in 1 minute. Don't hang up on me yet. Just give me like 2-3 more minutes. Hopefully I'm not making it too late for a meeting.
No, you're good.
Okay. Your thoughts on paying agents, on getting them licensed as mortgage loan officers? Just give me a high level, quick thought.
Yeah. So so there was a rule change about 2 years ago, right? Correct me if I'm wrong, as to where
something like that. Yeah, it was a clarification on dual compensation.
The clarification, I think, was that it was broader, made 100% compliant, right? And I can tell you that I had like 3 or 4 companies reach out obsessively. Like, this is going to be the next $1 billion idea. And what I said to them is, I fundamentally believe that concentration is everything, right? Because I pressure tested it with some of my most productive teams. And they're like, I don't want my agents distracted. They can barely get them to make their realtor calls. You think I want to add a second layer of information? And so, look, I think it's been explored and been around for a long time. And you tell me if you have different information. I haven't seen anyone scale it and do it successfully.
Complicated. Well, it's complicated. It's a gimmick. It's like private listings.
Yeah.
Touche, right? Touche.
Yes.
You like that?
Yeah.
You like
yeah,
how I snuck that in there?
Yes. But I was never bullish on it, and I don't see how that really scales.
So what are we looking at here, man? So this really stunned me when we spent time at the Derby, and you told me that you go spear fishing. I'm like, what is that?
Yeah, that's me at about 100 feet of depth, and that's a black grouper that was quite tasty.
So what is spear fishing? I mean, I know what it sounds like, but what is it really?
Yeah, it's I go in the ocean and shoot fish that are of legal size, and with about a 5-foot spear gun that's sitting right over there.
And how long are you underwater for?
Depending on the depth, that could be there anywhere from 30 minutes to all the way to an hour.
What's the scariest thing you've encountered?
So people assume it's sharks, and sharks are curious. But what I tell most people is the scariest thing, and to me, the ocean is an Amora eel. Because they are 99% blind. So once I shoot one of these guys, if they're close by, they could come trying to take a bite. And one of those, the jaws of an Amora eel was actually what the Alien character was designed on. So they have like this double mounted jaw, and it's terrifying. And I actually I know like 2 or 3 people who've been bitten by an eel and ended up in the ER. And I don't know a single person who's been bitten by a shark and ended up in the ER.
Podcast recommendation?
Ooh, that's a good one. I think the best thing about podcasts is they can get so niche specific, right? It's not like television that is, you get a couple big channels with a couple big shows. So I mean, I enjoy Diary of a CEO and a lot of the Harmozy stuff, and but I find them as a great way to learn stuff and research specific niches.
All right. Lastly, the Pareja Family Foundation. I saved the absolute best for last. You and your wife do so much for so many. Please tell us about the charity and what you're doing and how you're making a difference in people's lives.
Yeah. So on like our second date, we both realized that we wanted to give, and we both became mentors with big brothers and big sisters after the financial crisis. And I had an aha that, like, time is fleeting, and sometimes you have money and sometimes you don't. And that was one of the very painful lessons learned from the financial crisis, but you always have time. So we have always purposely contributed to something that's important to us. And right now, the last program that we've leaned into is we set up a financial literacy program with the Miami-Dade College. And so we wrote a course that we call it like Adulting 101. And I think loan officers would love it because we teach them a lot about credit. But it's just basic stuff like, hey, you get your first job, and like, do you get a credit card or not? How much should that credit card be? Like, do you understand trade lines and how many of them affect your credit? And what's an FSA and a HSA? And you can put pre-dollars towards health emergencies, and really helping someone navigate their financial credit. Because the most expensive tax on Americans is credit. And again, speaking to your audience, you guys appreciate this more than anybody, but like, when you have a lower credit score, everything gets more expensive. Like, the people who have less cash flow and probably need the most help actually have to pay the highest interest rates for everything. I went to the Apple store, and he said, hey, if you get this Apple credit card, like, you can finance all your devices at 0%. And he was shocked when mine came back at like 8%. He's like, everyone's comes back at 20. How did yours come back so low? And I said, like, I have like an 840 credit score, and I'm obsessed, and I have trackers, and I understand the utilization levels, and you got to keep it sub 30% and make sure you have 3 different lines of credit, but not more than 5. And right there's all these really unwritten rules that we found nowhere. And we came up with the course while we had our last startup, and I had highly paid young people, college graduates, engineers, salespeople, making mid six, like $150,000, $180,000 a year. And once a week, I would do what we call brown bag luncheons with the CEO. And they requested, they called it Adulting 101. They're like, can you teach us adulting. And I'm like, I don't know what the hell that means. And they said, well, I have a credit card and it's maxed out and my credit score is low. And I'm like, okay, how many do you have? And it's like 1. And it said $500. And I spent the $500 because I'm trying to build my credit. I'm like, this is the absolute worst thing you could do, right? It's like, pay it off, use a check card, put your Netflix reoccurring expense on it. And then, every 6 months, ask for an increase and, ask for $10,000. And all of a sudden people are like, oh my God, my credit score went from a 600 to a 720. And so we wrote a whole course around it. And then we partnered with Miami-Dade College to make it free and make it as accessible as possible, so thousands of people can have access to it.
Amazing. Well, this has been great. We covered a lot of ground. I know that the industry, both on the real estate and lending side, are going to appreciate this conversation very much. And come on anytime, share your thoughts, and let's make sure we don't wait, another couple of years to do this. That's okay.
Likewise. Thanks for having me.
Absolutely. And I think we're supposed to jump out of a plane or do something together, shoot hogs or something. So maybe one day we'll get around to it.
I've jumped out of a plane and I won't do that again because I have little ones, but I'm down to shoot hogs anytime you want. Cause I do redneck stuff here in Florida anytime you want.
All right. Appreciate it. We're going to say goodbye now, and hopefully you'll hang on just for one more second so we can upload. Leo Pareja, CEO of EXP. Thanks, man. Appreciate your time.
Sounds good.
All right. Talk to you later. Bye-bye now. Enjoy your Monday, everyone.